I use I'm gonna bring this up here. I use a website called Enact. Okay, Enact. So if you just go to enact.com, okay, and you go to, might be underwriting. Oh, okay. If you go to Enact website, okay, and you go to solutions, there's a sub-tab called self-employed borrower tools. Okay, you click that, it takes you to this page. It's free. Okay, guys, it's free. And if you click on Fannie Mae Form 1084 calculator, the PDF version, okay, the PDF version, we're going to only focus on this one right now. If you click on it, it brings up a cash flow calculator for you. Okay, and right here on the second page, okay, on the second page, you'll see IRS Form 1120S for S corporation earnings. You guys all see that? Okay. Now, I love this calculator because it's super straightforward and simple, and anyone can do it. Okay. I really do think I could teach my elementary kid, my daughter, how to do this, because all you do is plug in a few numbers and it's all referenced there for you where to look. Okay. Now, a quick disclaimer here. Okay. Right now in the world that we are in 2024, right, with AI, with virtual assistants, and obviously with our great processing team in Gia and Romy, we don't need to do this as loan officers, right? Because they're going to do it for you, right? All we have to do is submit the tax returns and they're going to do it for you. However, I still like to do it up front. Why? Number one reason why? Because my agents and my borrowers many a times want to know what their income is and how much they want to qualify for right away. What if you're working on a Saturday or Sunday, right? And Gia or Romy or Peter is not available. And I don't know, you can't trust AI right now, right away. Well, just do this real quickly. It's very, very simple. I'm going to run through this real quick, okay? And then I'm going to teach you and show you, okay, how to do this without even using this calculator, okay? So hold on, let me just split this. There. Okay. So I'm going to show you this using this calculator right now. And then I'm going to show you how easy it is to do without this form. Okay. All right. So I'm going to start. I'm going to go to, it says ordinary income law or Schedule K. So I'm going to scroll down to Schedule K. So just watch me do it real quick. Okay. Line 1. It's 152,744. 152. Oops. Okay. So I'm using 2023 right here, 2023. So here it says net rental loss. There is none. So I just leave it 0. I can put 0 there. Okay. I'm going to go to this now. I'm going to go to the form 1120S now. So I'm going to scroll back up. Okay. Lines 4 and 5. There's nothing really there. It's $2. I'll just go ahead and put the 2. Depreciation, line number 14 is nothing. Depletion, the next line 15, nothing. Amortization. So amortization, guys, you kind of have to you do have to look for it. It's in the statement, a different statement. And you'll get used to this too, but it's right here, other deductions. Okay, this is a statement right here. So statement 1, statement 2, statement 3, and other deductions. I'm going to look for amortization, and there is none here. Okay, there's no amortization, so I'm gonna put 0. Okay. Mortgages and notes payable in less than 1 year. It's Schedule L. Okay, right here. Oops, one more. Schedule L. This is the balance sheet. There is none right here. Number line 17. Oops, line 17 here. There's nothing there, so I'm gonna put 0. Okay. Travel and entertainment is Schedule M. So I'm gonna look for Schedule M here. Line 3B. 3B, 946. So I'm gonna put 946. Okay. Now, I'm going to explain really quickly here why we have to add this number. Okay, just for you guys to hear it and for you to know it. The reason why we put this number here is in most cases, if you're self-employed, you can only deduct 50% of your meals and entertainment expenses. Okay, so Hyuna is a loan officer, right? And next year in April, she's going to meet with her CPA to file her taxes. And she tells Mr. CPA, I'm self-employed. I get a 1099. I did $200,000 in mortgage income. But I want to write off all the meals that I spent. And let's just say Hyuna is a high life, luxury living, loves, high-end food. Okay. And let's just say that from her $200,000 1099 income that she earned, let's say that she spent $50,000 eating at really nice restaurants. Okay, and so she's like, great, I'm gonna go in from that 200 I made on meals and entertainment. I'm gonna expense $50,000, and the CPA is gonna say, nope, you can't do that. You can only expense half of that. So 25,000. That's what this number represents, this 946. So in actuality, in reality, okay, this person didn't just spend $946 to claim on her taxes. She actually spent $1,900. But because the tax rules only allow her to claim half of it, we have to subtract out. You see there's a minus sign here. We have to subtract out an additional 946. Okay, that's what's going on there. Okay, going back here, it says percent ownership is 100%. Okay, and so the S corporation total income is 151,800. You go down here. The number of months is 12 because she worked for 12 months for the full year. You hit this green button and voila. Okay. You get a monthly income of 12,650. Pretty easy, right? Pretty easy. This calculator all does it for you. Again, you go to enacti.com, go under solutions, self-employed tools, and you'll see this calculator. I'll send this link to you guys later. Okay. Now, when it comes to self-employed borrowers, guys, okay, there you do have to take a 2-year average. Okay, it's a 2-year average tax returns. So I need to technically go through this here. Okay, and fill this out again for 2022, and I'll do that real quickly right now. 6144.6. Okay, this is 0. Oh, income loss. Shoot, sorry, guys. It's negative 17, right? Yeah, negative 17. So K1, negative 17,314 there. This is going to be 0. Okay, scroll back up. Okay, this is 0. Depreciation 0. depletion 0, amortization I already know was 0, mortgage is also 0, deductible entertainment. So if I go here, right, mortgages and notes is also 0. Here, they didn't claim any meals, so it's 0. Okay, 100% ownership. Okay, now, so this corporation, okay, this corporation had a loss of $17,000 for the year. Okay, now when you go down here to calculate it, you did work for the 12 months. Okay, and then when you hit the green button, it gives a negative income. So if you click the bottom to your average green button, it gives you the income, okay, for the 24-month average. And that's basically what you're going to use. It's not going to be the 12,000. It's going to be the average, because with jumbo loans and with conventional loans, you always have to take the 2-year average. Okay, there is an exception to this. Okay, I don't want to confuse you, but there is an exception to this. If, say, this showed 2020, let's just say 2015, and this corporation, okay, is more than 5 years old, you can go with the 1-year tax return program and not use this 2022 tax return. Does that make sense? If this corporation was more than 5 years old, you can choose not to use this 2022 tax return that has a loss on it and just average out 12 months. That is the exception to the rule. Any questions on that? Is that pretty clear? So in this case, if this was an older corporation, I could tell them, hey, or I could tell them, hey, can you wait another 2 years to buy? I'm not really, but hypothetically, I could tell them wait 2 years to buy. We don't have to use this tax return. We can just go based off of this one here, the 2023 tax return, and it'll be a much higher income. But because we have to use it, okay, the income is going to be a lot lower. Now, there is one thing that I didn't do, okay, and that is line number 7. Okay, so if you see line number 7 here, what does it say? Compensation of officers. Compensation of officers. What does that mean? That means that this Sheila, okay, who is 100% owner of this corporation, as we already established here, okay, receives or pays herself a salary of $67,273. Okay, so if you go back up here, and this is why this calculator is very nice, is you'll see here W-2 income from self-employment. We can go ahead and add the 67,273. Okay, 67,273. And then for 2022, it was 7041. So 7041. Do you guys have any questions on that? Okay. If this was 50, no, let's not do that. Okay, yeah. Opposite, and now, how do I know this to be true? Okay, how do I know this to be true? I don't know if I have a copy of the W-2s. Actually, I do. Here it is. How do I know this to be true? Because in 2023, Sylvia Gutierrez, who's the owner of Vivid Minds LLC, the corporation, paid herself $67,273 in 2023. You guys all see that? Make sense? Okay. If I go to 2022, what number should we see? The 67, right? I'm sorry, 7,000, right? 7,000 right there. You see that? Here, let me zoom in. So from Sylvia, from Vivid Minds Therapy, paid herself $7,000. Now it is a little off there. I don't know why that is in 2022. Let me see why it's off. It could just be a misfile on her end by a little bit, or interest income somewhere. But let's see. Yeah, that's an error. But it's close enough to see where she paid herself. There's a W-2 in 2022, right? 2022. She received a W-2 of $7,000, and the tax returns show $7,000 there, which we get to add back.
Okay? Hey, Rock, I don't know what the reason is for that slight difference, but just to let you know, over all the years I've analyzed self-employed income, none of my W-2s ever matched up exactly.
Okay.
Yeah. So I don't know how it's calculated, but just know it's a common thing that the numbers will not be exact.
Okay. Thank you. But it's very close, right? And at least for 2023, it matches almost exactly, right? 67,273 on the W-2 and matches the 6723 right here on the corporation taxes. Okay, so we're going to go ahead and add that back in here. Now, because we added this income, we have to go down and make sure we update this. Did you guys see that change? Okay, it gave it more income. Okay, so we got to update this, and now it's a higher income. Okay, so make sure you just update it. Okay, so now I can take this, I can print it, save it, send it to Gia or the underwriter, or just use it for yourself to know confidently that her qualified income is going to be $8,700. Okay, any questions? Pretty simple. Pretty simple. Okay, so I'm going to show you a quick method, okay, using a different tax return. That one's complicated. So these are older tax returns, but it's okay. I didn't realize how little or few self-employed borrowers I've been working with lately. Okay, so you guys can do this with me if you'd like. Okay, just jot down the important numbers. I'm gonna try and do this within 60 seconds. Okay, and figure out this person's income for 2020. Okay, you guys can take a crack at it too if you'd like. Okay, so give me 60 seconds. Okay, time. I hope I'm right. Okay, I hope I did this right. So we'll see. Okay, we'll see. So we're just going to calculate only 2020 income. Okay, so let's see if I'm right. Okay, so I'm going to go ahead and delete all this. You know what? Let me just go out of it and get a new one. let's start with K1. Okay, try to follow along if you can, whether you write it down or you bring up the calculator itself. Where is the K1? Okay, here's the K1. So same one, right? This is a Dr. Dayrit. She is 100% owner. There's a K1 because it's an 1120S. So this is an S corporation, okay? So I will start. So we're going to go here. We're going to go 18524. 18524. Okay. This is 0. Okay. I'm going to go all the way up. So 4 and 5 is 0. Depreciation is 52870. Depletion is 0, line 15. Amortization, I'll come back. Okay, amortization is again going to be, if there is, it's on the statement. I'm going to find the statement one. Here it is. Other deductions. Okay, statement, other deductions. So this one actually has amortization. Check that out. So that's a good one. Okay, so we can add that back. Oh, where am I? Amortization of 30942. Okay. I'm going to ignore this because this one takes a little bit of time of explanation, but it says to go to Schedule L, right, my balance sheet, and it asks for line 17D. Okay. I'm going to ignore this for now. Okay. So just ignore it and put 0 for now because that is some explanation needing to do. Then I'm going to go to Schedule M, line 3B. Okay. Now in line 3B, there's 2 numbers. Okay. So I already know it's going to be the 7222. Okay. And I'm going to tell you why. The reason, okay, so there's 2 numbers. So the reason why I'm only using that number there is because when I go to the other deductions, okay, that 722 is the meals, or 27 number rather. You see meals? Meals. It's 2723 here, but that's how I know it was that number to use, a 2722 number. Okay. Now the other expenses that she expensed, this $9,000 number right here. Okay. This $9,000 number here. It says C statement 6, right? See statement 6. So I'm going to go to statement 6. Right here. Statement 6. And these are just other expenses. But we don't have, the point is we don't have to worry about this. Okay, we only care about, again, the meals. That's all it is, the meals. Okay, because you could only claim 50% of the meals. Now, this is, again, I saw that it was 100% owner. Okay. So let's see if I get the right. I don't know if you guys caught this. Compensation, number line 7, compensation of officers is 127,438. So I'm going to go back up here, 127,438. Okay. And I'm going to scroll down. I'm going to hit the number of months is 12. I'm going to hit this green button. And the number I get is 18921. 18921. And in that 1 minute that you guys gave me that I figured it out, I know it's reverse. 18920. 18920. So how did I get that so fast and without using this calculator? It's really simple, guys. It's just memorization. That's all it is. There's a few numbers that you are going to add, and there's a few numbers you're going to subtract. as in case in point, this calculator. So in reality, when I'm in front of my client, okay, and I'm with the borrower, let's just say you have a one-on-one consultation or it's through Zoom, okay, and they bring their tax returns. I look like a genius to them. Even my realtors, they go, wow, Ragnar, how did you do that so fast? Because it's all up here. I memorized it. I memorized this calculator. This calculator is not that difficult. It's just addition and subtraction, right? So we're going to kind of go through this together right now for 2021, okay? So if you can, and this is where we're going to end it, okay, today's training, let's calculate this manually. Okay, we're all going to do this together. So have a pen, paper ready right now. Okay, so let's start with, we can even just go down, straight down in the order of the tax return. Okay, so let's do this together. All right, everyone get a pen and paper. We're going to do this together. So what's the first line there? I'm just going to ask the question. You guys answer it. What's the first number there that we're going to factor in? The first line. What's the first line that we're going to factor in? She's the owner. She pays herself a W-2, right?
Compensation.
Yes, number 7. So you're going to write that number down. 242,424. Okay. And then what's the next line that we're going to add? Do you remember what it was? Depreciation. Okay, so you're going to add 89179. Depreciation. Okay, that's all you need on this page. Okay, that's all you really need on this page is number 7 and number 14. Okay, number 7 and number 14, compensation of officer and depreciation. Now we're going to scroll down to Schedule L, the balance sheet. Now, again, we're going to ignore this one right now real quick, okay? Because it takes a little bit of explaining to do, and I don't want to confuse you guys, so we're going to ignore this for now. Okay, so the next part was Schedule M, right? For what? The meals, right? The number here is 1344. So we're just going to go ahead and subtract or put a negative 1344 to the side because it says see statement 8. Okay, whenever it references a statement, you just have to benchmark it. Okay, because it may not only just be meals, there might be some other things. Okay. Now we're going to go to the K1. Because she is 100% owner, we're going to factor this loss of 30,655. Okay. We're going to factor that loss of 30,655. Now we're going to keep scrolling down to the statements. Okay. Okay, here's the statement. What do we see here that we got to consider? Anyone remember?
Amortization.
There you go. Who said? Good job, Hannah. Amortization. So we're going to add back amortization. 39,922. 39,922. Okay. There's another thing that we have to actually add here. Does anyone remember what it is?
Meal.
Good. Yeah, awesome. Yep. So we're going to subtract the meals. Okay. We're subtracting meals. Okay. So you're going to put even though the number is positive 7106, you're going to subtract 7106. I'm going to explain this to you real quick, though, why this is what's going on here. But good. It is meals. Then we're going to go to statement 8 just to see what it is. Okay. But again, statement 8 doesn't have the meals here, so don't worry about this. They're not going to subtract this out. Okay. Okay. Now, this happens once in a while. Okay. This CPA okay, on Schedule M, you'll notice in the statement, meals reflected 7106. But you'll notice in Schedule M, get there, they don't have 7106 here. This happens once in a while. But I am telling you right now, in my 15 years of doing this, the underwriter is going to expense out 7106 though. Okay? This could just be a oversight by the CPA, but for underwriting calculation purposes, even though it's not here, the underwriter will look at the statement and see that meals, 50% of the meals was deducted here, and so they're going to subtract out 7,100. Okay, so just do yourself a favor and just go conservative. And if there is meals on this statement, expense out or deduct out another $7,100. Okay, so why don't you guys add and subtract your numbers and you tell me what you get. And I am going to really quickly do this here. Okay, I'm going to really quickly attempt to do this real quick right here and see if you guys get the same number. Okay, does anyone have an answer for me? What did you qualify? What did you get for your monthly income for just this year? Anyone want to take a crack? It's okay if it's wrong. Anyone want to take a crack?
About 27,700.
Okay, 27,000. Okay, anyone else? Did anyone else get a different number? There you go. 27,813. Okay, 27,813. So we're going to go through this real quick if you didn't get it. Okay, just hopefully you wrote the numbers down, right? So 242, and I may have entered a number wrong or incorrectly perhaps, but we got 242,424, right? That's the compensation of officer there, right? So that's number one. We scroll down and we add, right? Or K1 showed a loss of 30,655, right? The K1 showed a corporation loss right here. The K1 number is also on here actually, on line number 21. Okay, we added depreciation of 8917, right? That was our second number, right? The K1 number of negative 30,655 was our third number. Okay, amortization. Remember amortization? Kind of pointed out on this statement there was amortization. Did I miss it? No. There was amortization of 39922, right? There was meals of 7106, and that's it. And so see the 100% owner, it adds it for you, divided by 12, you get that number, 27,813. 27,813. Did you guys all get that? Everyone else? See on? Kenna, Paul? Right? Pretty simple. Okay. So you don't even need, now once you kind of memorize what variables you're working with, you don't need this calculator. right? So you see a tax return. Okay, I'm going to bring up another tax return real quickly for you guys. Okay, and I'm not even going to do this calculator. I'm just going to close it. Okay, let's make it easy. And we're going to go through this real quick, and we're going to end it here. I promise. You get this tax return, right? All you do when you get this calculator, you get your handy dandy calculator, right? You see the first number, $162,000. Okay. To that, I'm going to add depreciation plus 854. Okay. To that, you're going to add ordinary business income or loss here, 8688270. I'm going to add that because I'm going to show you why. Okay. You're going to go to mortgages and notes. Don't worry about that for now. Okay. 3B on the schedule M1, travel and payment 64 or 3484. So you're going to subtract 3484. Okay. So this is a husband and wife. Okay. This Daniel owns 50% and wife, Irene, also owns 50%. So she got 344,000 and he got 344,000. If you add 344 times 2, what is it? 688, right? 688 was this number here, the corporation earnings. That's why I was certain that we can add it. Okay, so we add that, right? Now we go to the statement. Where's our statement? Here it is. Do they have amortization? No. Now here their CPA did it correctly, right? They were very detailed and put meals 50%, but we already took care of that. That's the 6484. So we add that all up, divided by 12. So their monthly income is going to be 70,000. Okay, it's that easy, guys. As long as you know the 5 lines to look for, you can calculate this just like that within 60 seconds. Okay. I'm going to pause here and ask, do you guys have any questions? No? Silence is a no then. Okay. I told you that I was going to cover this line on the schedule L. I hate this line. And you guys, as you guys work with self-employed borrowers, especially for jumbo, because there's no way around it. With conventional, I don't even think there is either. This line number 17 on your schedule L can literally be a deal killer. Okay, line 17 of your schedule L, I just highlighted it, can be a deal killer. Okay. All right. So here, what you do here is this, okay, is you're going to take the number that's under column D, okay, and you're going to subtract column number B. In this case, it's not going to work out because it actually went up. So to explain what this is usually this number will be, if this is 148, usually what happens is that this number will be like 100. Okay. Let's just assume that this number is 100. Okay. So at the beginning of the tax year, the mortgages, notes, bonds, and payable is 148. But at the end of the year, it's $100,000. What's the difference between 100 and 148? Anyone?
48,000.
48,000, right? Simple math, right? Just checking if you guys are awake right now. Now, I'm going to go back to that calculator. I don't know why I don't have it saved. The reason why that line can be a deal killer is because Okay, it's right here. It's a subtracting number. Okay, you subtract this from your cash flow. For all the numbers you get, you're going to subtract out. What that number represents here is monies that the corporation paid to cover a mortgage or a bond that's associated to that corporation. And because that's monies that went out, it has to be subtracted from the overall cash flow. Okay, so again, this line here represents cash that the corporation paid to reduce a liability. And because the corporation paid that liability from their cash flow, like literally if they had $200,000 of earnings, but that $248,000 went to pay down that mortgage, we have to subtract it out from the overall cash flow. Okay, now $48,000 on, now in this case, whose file is this? Is this Irene's or Luzminda? Okay, who we calculated about $87,000 wipes up half of their income that we can use. That's why it can be a deal killer, that line. Okay, for now, if you see a tax return and you calculate everything and you see a line 17, I would say for now, pause, call Peter, call myself, call Gia, and figure it out if you're dealing with a client in person. Okay, because that can be a deal killer. I've had deals killed because of that, literally. My hands to the heavens, for even doctors who own their own practice, it killed the deal, and so we have to go non-QM. Okay, so I just wanted to make point of this at the very end. Now you'll notice though, majority of tax returns, when you're dealing with mom and pop businesses, you're not going to see a line 17. Okay, as you don't see with this law group, the Shin Law Group, nor will you see with the first set of tax returns I showed you. Okay, line number 17, you don't see, there's zeros. You guys see that? There's zeros. You're not going to come across this a lot, but you will. But should you come across it, just prepare for that. Okay. Let me see if this oil company reflects it too. I think it does, but maybe not. Nope, it doesn't. Okay, it doesn't. Line number 17 here. Okay, see a big fat zeros across. So many a times, my point I want to stress is you're not going to see it, but you may see it as actually this gas station. Actually, what happened was you don't see it in 2020, but you're going to see it in the New Year's. Maybe not. All right, never mind. But yeah, there's another client that I have that recently took out a loan. That's why. But any questions? Do you guys feel a little bit more comfortable how to calculate self-employed income referencing tax returns? Yes? Yep. Kind of, yeah. No, maybe, kind of, sort of. Romy? Yeah. Paul? Yeah. It's compensation of officer. You add depreciation. You subtract or add the business loss or gain. You subtract out meals. You add amortization. Those are the 5. That's it. Now, if there are mortgages and bonds payable in less than 1 year, you do have to subtract out the negative cash flow that it caused. Okay? All right. Thanks. Thank you, guys.
Thank you, Ragnar.
Thank you, Ragnar.
Very extensive meeting today. It is necessary. I don't know how else to emphasize the importance of calculating income. So if this is necessary, we may have to do multiple sessions of training. Even at the bigger lenders, they're doing a monthly sessions. When I was working for the lender, we had to do a monthly meeting just to make sure each one of the loan officer knows how to calculate the income. We don't want to look embarrassed in front of our client and agent after setting their time apart, and we don't want to show up and waste our time too. Okay.